Welcome back to Street Smart. We continue our ongoing series, Real Estate Risk and Reward. One way to gauge the effects of the disaster in Japan and the turmoil in the Middle East on the world's leading economies is through the lens of commercial real estate. I had a chance to sit down with one of the CEOs of one of the largest commercial real estate brokers in the world today, Colin Dyer of Jones Lang Lasalle. I got his take on all the uncertainty in the markets over the past few weeks and his appetite for risk after the earthquake and nuclear crisis in Japan.
Well, we're a business with two halves, if you like. The service part of our firm advises investors and corporates on their real estate needs worldwide, and our investment management firm handles $45 billion of investments in real estate on behalf of international institutional clients. And if we take that second part first, the part of our business that acts as a fiduciary and invests in real estate, there's no doubt that post the crisis, the world of institutional investors has recovered its appetite for investing in real estate really very quickly. And initially, the new funds, was flowing into stable, core, safe real estate, typically in or around big conurbations around the world. Unfortunately, what happened was that sort of asset became pretty scarce. Few sellers, lots of buyers, and prices, having declined rapidly during the crisis, were bid up again very quickly. And so institutional investors worldwide have been looking to gradually move out along the risk curve, looking for opportunities to add value to real estate, take more risks, in search of enhanced returns. The last couple of days, as you say, there's been some exogenous shocks to the system. It's just too early to tell what impact Japan and some of the Middle Eastern crises will have on that increasing appetite for risk on institutional investors. But on the whole, I would say the momentum for world recovery, the momentum for investment in real estate has been building over the last 12 to 18 months post-crisis, and I think it should survive the shocks we're seeing over the last couple of days.
What are you hearing, though, from your offices in Japan? I mean, we've been hearing from a lot of people that Japanese investors may repatriate a lot of investment capital. On the other hand, you could make an argument for pushing capital out of the country. I mean, what's the situation like there as far as the capital flows?
Well, it's too early to say what capital flows are going to do. It's literally a question of the last 72 hours of trading, of business time. What we can say about the assets that we help to manage on behalf of clients, or indeed are in our own funds, is that 90% of Japan in construction terms is unaffected, in the sense that there might be a few broken windows, but the building codes are pretty solid and assets have survived in good shape. The other question, however, which is on our minds currently, is the impact on just business in general. So if you're running a distribution center, or if you're an owner of a shopping mall, activities are clearly way down in terms of commercial activity, consumer spending. The distribution system is in some state of dislocation, and it just remains to be seen short term how much of an impact that's going to have. So I would guess that just immediately little trading of assets, the liquidity in the market for buying and selling real estate will obviously come to a halt until there's clarity in the situation. But the underlying cash flows generated from real estate, that's where we're going to see the biggest impact short term.
What are you seeing, though, as far as your offices, your operations in Japan, in Tokyo? We're hearing that not only whole companies but whole countries are pulling people out of that country for fear of radiation poisoning. I mean, do you have any accounts of that happening?
Well, we're in Sapporo, Osaka, and in Tokyo. Our Tokyo office had been running at sort of 30-40% staffing levels, simply because people were unable to get in on the train system, which has been not running normally. We have, since the latest news about the radiation cloud, followed the government's recommendation, and our staff will stay at home, but we're certainly not leaving the country. The majority of our people are Japanese. They live in and around Tokyo. It's their home. So they'll be following the government's recommendations as to what they should do in the interests of public safety. We are on the ground supporting our clients where they need help in recovering their real estate, recovering their activities, but we're doing that within the context of what the government is advising the country country as a whole to do.
So in general, sort of midterm, longer term, looking out, visibility is very tough there.
It's just too tough. It's too early to tell. And I mean, a huge amount depends upon what happens with these nuclear reactors. If they degenerate further, that's obviously a different situation to one where there's some sort of stabilization of the situation and the power company gets them under control. But I guess the rest of this week is going to be very decisive for the country as a whole and for business in Japan to know which way things go.